Good morning, everybody. Okay, I am so sorry for starting the stream late. I was having massive issues with my laptop, so just give me 1 second, everybody. Holy moly. Okay. All right. Yeah, good morning, good morning. Let me get this shared out. I'm so sorry everything was late. My laptop was stuck in a restart cycle and everything I was doing to repair it wasn't working, and then it just automatically fixed itself somehow, so okay. Give me a second, everybody. Good morning. Okay. All right, just give me 1 second and we will go over the market. What a mess. Let me tell you, what a mess. What a way to start the day. Okay. All right. So let's go over the market. Let's go over the SPY. Blah, 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 blah. NVIDIA's had their earnings yesterday and they were okay. They were a beat, but it wasn't enough really for the market, I don't think. Now, there's this very large gap that I'm targeting, and it's at the 733.90. Now, technically we have a call entry, but I'm not going to be taking this. Um, I am fully expecting this to break down very soon here. We have liquidity for a head and shoulders built. Yes, it looks wonky, but it is still a head and shoulders liquidity. And very likely we're going to form a larger inverse cup. Okay, so that's what I'm targeting. Now, on the hourly, this can be potentially trying to form into a smaller cup and handle here, which I'm going to delete this box. We don't need that right now. We don't need that right now. But this can be forming liquidity right here to attempt to create a cup and handle to the upside. Now, let's go ahead and look at the HIG. Let's look at VVIX. So the HIG is seeing selling today, which is, very indicative that the market does not want to buy the current upside. And we have our VVIX extremely elevated today. So far, these are very quality selling signals. We should be heading downward. Now, you're gonna have to give me just a second because I need to turn my heater on because my room is freezing. Usually I would have had it on already, but I was dealing with the computer being stupid. Okay, so that's kind of the target right now. Now, one other thing about this target is that there is this gap right at the 737.05, which we will try to take calls into. Okay, but we need to wait for that to push all the way down first. Now, the reason why we will take calls into that is because this creates the inverse cup, should see a small handle before pushing down. Okay, so that's what we're looking for. Um, Taking calls, and I'm gonna write this out on the screen. Okay, so that's the current play right now. I'm gonna turn on my heater so it doesn't sound like I'm shivering like a maniac. Good morning, everybody. I really apologize for starting late. My laptop was giving me nightmares. So we're gonna look for a call entry on that now. That call entry will be a 738 call. We can do a 738 or 739 call. Um, Either of those will be fine here. Okay, so that's what we're looking for currently. We want to wait on the puts. Remember, no need to FOMO into positions here. We have plenty of time right now. So first, allow this handle to the downside, or allow this cup close to the downside. Before we enter calls, puts, anything. Okay, you want to let that level hit. Now, I do want to check semiconductors. So semiconductors here, looking fairly okay. They are giving us a short entry, which I actually do think I want to take. So this means I'll be taking the success calls, which these will be the 9 strike calls, and I'll be taking them for next Friday. So hold on, I'm trying to get navigated over there. Okay, got 2 of those going. So again, success calls are basically saying that you are shorting semiconductors. Now, the reason why I'm willing to short semis here is that if we're forming this cup, then we should get this handle. Now, I'm expecting that handle to break downward, as if we're going to fully head to the upside, we need to break past this 524.83, which we definitely can do. Let me go ahead and take a look at NVIDIA. Look at the 30-minute. See, NVIDIA on the 30-minute time frame here has this very well constructed head and shoulders. Now, very likely, they're intending to use this liquidity to push to the downside. I would say this is a cup, but it's been actually invalidated already, so um it's hard to say that being a cup and handle. If anything, I'm looking for this inverse cup to close right there. Now I want to check the SPY. SPY pushing upward a little bit. Should likely fill that cup right there. Um, but from that entry, that's going to actually be a really nice put entry. So that put entry will be the 738 puts. Okay, and these are 0 DTE. Sorry if I'm not typing in chat or anything right this second. Got off to a late start today. Okay, so I am entering the 738 puts now. At 132 entry on those. Now I will be exiting the majority again at that 20 mile. The 20 mile isn't that far away. It's at the 738.67. So we have roughly $1.40 down from when we entered if you entered pretty much right when we did. So we will be looking for that. I'm going to mark this entry so that we can check back on that in a couple minutes here. Semiconductors, I want to mark this entry as well so that we can check back on that. And again, we are looking for the middle Bollinger here, or 20 mile, however you want to define it. It is currently at the 517.86, so we have quite a bit of room downward. Now, I want to look at the HIG, I want to look at the VVIX and just make sure we're not buying into a market getting ready to buy upward. Okay. Now, the HIG is still looking weak. It did pull down all the way to the 79.65 this morning. Currently at 79.76. I'm expecting it to kind of reject this middle Bollinger on the 5-minute time frame and start heading back downward. And let's check the BVIX here. BVIX has pulled down quite a bit. It opened at the 97.26. So if we continue seeing this drop, that can be an indication that we're going to be heading to the upside. Um, but with our current entries, we did enter at, opportune times. So we will navigate things from there. Now I will go over the long positions in just a minute. Um, but I just want to ensure that we're going to be fully receiving our downside here. Again, I'm looking for HIG to start tapering, looking for liquid to start tapering as well. And we're looking for the VVIX to start pulling back upward. It did hit the 95.35. It's back up to the 95.52. So potentially a little bit of dealer hedging going on. But we do have all the liquidity for a head and shoulders to take us downward today. Now, technically, we can pull up to the 141.71, 142 range before that fully validates. But with our entry here, I'm thinking that's looking fine. We just have to be very careful with this potential cup and handle. Now, again, today I'm going to be discussing how to properly hedge positions slash hedge your portfolio. We will go over that in probably like 30, 40 minutes. I just want to get grounded a little bit after that nonsense of my laptop being in a restart loop. Let's see, oil is dumping. It's dumping a little bit, definitely dumping a little bit. Um, However, I see this massive, massive, massive cup right now, which to me that's telling me, okay, sure we're pulling downward, but likely to pull back upward. Um, I haven't been able to check the news out of Iran or anything this morning just yet. Want to take a look at Nvidia again. So it did pull upward, pulling back downward. Looking for this 20 mod to reject to the downside. Okay. Really not seeing this as a cup, even though it hasn't fully invalidated. It's literally about 50 cents off from a full invalidation. And we will check the VVIX and everything. VVIX is at the 95.50. It can pull down to the lower Bollinger first before starting to head back upward again. But with a lot of the market being at the top of these smaller cups here, we should be expecting bearish structure regardless. So I'm continuing to hold those puts, they're still a very good entry. Again, we always enter above the lower or above the upper Bollinger for puts. And with today being, pretty sketchy, it doesn't look like that so far, but I'm seeing a lot of signals that it can be. And we do have a lot of very, very bearish structure throughout the entire market. So we will see where it goes. Now for SPY to head to the upside, and I just want to look at the daily time frame for a minute. So thank you. Currently the 5 mile is at the 738.60, which means that technically testing the upper bounds of that 5 mile range is going to be around that 740.60 range, which means that we're still very much so within a 5 mile test. Okay. Now with that 5 mile test, we can bounce up to the upside. Okay. That can be something that's, you know, potentially going to happen. Um, Even though we're very much due for a 20 mile test, and we did talk about this over on Tuesday. Let me pull up semiconductors. But because semiconductors were able to reach their 20 mile level, that might be enough, fuel, liquidity, whatever you want to call it, to continue pushing for another upper Bollinger move, which that's kind of the worst case scenario, right? Um, but one thing I am seeing here is that the 5 mile is quite below where the market is right now, and the 10 mile is below that level too. So unless semiconductors are wanting to basically do a $30 move to the upside, um, we still have a lot of work to do with these moving averages. We still have to pull the 5 mile above the 10 mile, retest that level, and then head to the upper Bollinger. So we do have some consolidation prior to a massive move to the upside. With SPY here, a little bit of the same deal. It's just a little bit of a tighter range, but we're still in a somewhat bearish stance here. Very short term, okay, but we still have the 5 mile underneath the 10 mile. And as long as that 5 mile is underneath the 10 mile, that is telling us that, the next move is to pull the 5 mile to the 20 mile. Now, it might seem like a far stretch based on where we're at right now, but I think that the market price can sell down pretty quickly if we're going to start getting our selling. Now, I want to look at the VVIX again. So it is starting to pull back upward. Is at the 95.79. So that's telling us that dealers are starting to hedge positions. Okay, so if this is just a simple 5 mile test to the downside, then what we're going to be expecting out of the SPY is a rejection of this level. Okay, because essentially 5 mile is basically right in there. We will mark that. But the upper bounds of the 5 mile is at basically right there. Okay, so if we reject this upper bounds of the 5 mile, which so far it's looking okay, um, 1 minute time frame, we are starting to see a little bit of bearish structure with this potential head and shoulders. So our short position does look very good right now. What we should be expecting is to pull down to the 5 mile, retesting that level slightly, and then pulling down to the lower bounds of the 5 mile, which that's going to be at the 736.60-ish range. So lower bounds around there. We will mark this with, I don't know. We'll mark this with yellow right now. So essentially, the goal of the day is that we're looking for the push down to the 5 mile. From that 5 mile, we are looking for a push further downward. However, we have to be concerned that we can actually use the 5 mile to bounce back upward. Okay. So be very wary of that. But with the VVIX moving upward, with the HIG selling today, and let's go back to the HIG for a second. HIG's still seeing a little, excuse me, a little bit of buying. But within the actual shares, uh, I'm seeing a lot of selling volume. So this should start correlating into a move to the downside. Now, one thing we do have to kind of remember about the HIG is that it will follow TLT, the overall treasuries. And one thing that definitely pulls the treasuries downward is when, trying to find USO, is when oil starts pulling downward. Okay. But if oil starts pulling back upward, then that's going to tell us that, okay, um, yields are going to start pulling back upward again, and that will pull the HIG and TLT down in tandem. Now, the reason why HIG follows TLT a little bit is because it is based on bonds. Um, Bonds want to keep their spreads fairly close. And I do apologize, I haven't had a lot of time to go over chat or anything yet. Um, Again, kind of started the stream a little late because my laptop being stupid. There's a 340,000 share sell on HIG just now. So very, very large block selling to the downside. We're seeing our VVIX did pull downward a little bit, so it's at 95.50 again. It was up to the 95.92. So we just have to be very, very cautious of this. If this continues pulling downward, that can say that, we're going to be heading to the upside. Not expecting that. I am expecting again this smaller head and shoulders on the 1 minute time frame to play out. Now, one thing we do have to be cautious of is the ADL. That's basically, like a bank account. If you're seeing it move upward, more money is moving into the symbol. If you see it moving downward, money is being withdrawn. We had a little bit of money taken out this morning, but now a lot of it's been put back in. So we're kind of just waiting for the next major move, either to the upside or downside. Now within semiconductors, starting to see a little bit of that bearish structure as well. Do have this nice chunk of liquidity right there to create some of this downside. Now it might seem like I'm super bear biased right now, um, but that's primarily because QQQ and SPY has not retested their 20 mile level, and basically over a month and a half now. Um, Very, very, very rare. Okay. Now, one thing I want to look at here on QQQ is where the 5 mile is. So the 5 mile on QQQ is at the 708.16. The 10 mile is at the 710.71. So we can be doing a 10 mile test currently. Upper bounds of the 5 mile is around that 10 or that 710.15. So we are slightly above that. However, we do have this really nice constructed inverse cup. This bullish cup has been somewhat invalidated. So I am looking for this to pull more into a double top to fully give us that 703 to the downside. Now again, I want to look at the HIG. HIG's still buying upward, so at 97.81. That is a pretty major buy to the upside. It was at 97.60 something today. So, And again, I'm just keeping my puts currently. Always enter above the upper Bollinger. Even if we push up slightly more, um, our entry was still there. That's still a good entry. We're still going to be looking for some form of downside from this, whether this is, a bullish cup or not. Okay, top of a bullish cup, we do expect bearish structure. We do expect a little bit of downside. So we should get out of those puts perfectly fine. I'm not worried about that. VVIX pulling up a little bit. Um, Again, it's really important to watch because every single penny to the upside means that dealers are hedging their positions. Um, but we have again seen it pull down quite a bit today, so that is a little concerning. Semiconductors continuing to see smaller bearish structure, so we should see this inverse cup take to the downside, which that inverse cup and handle um, will help us create this right shoulder liquidity. So far that's looking very good. That trade looks like a very good setup. On SPY here, we were looking for this right shoulder. So I'm trying to grab that right there. And potentially this could be that right shoulder. It might look a little wonky, but liquidity is liquidity, and as long as the liquidity is there, then we can absolutely use it to push to the downside. So looking for that, BVIX still pulling up a few cents here. HIG pulling back a little bit. I am again looking for HIG to pull back quite a lot today. And I do want to look at NVIDIA, and I will get to chat in just a couple seconds here, everybody. I do apologize. NVIDIA continuing out that bearish structure. So if we see it pull down to the 221.34, that will invalidate this potential bullish cup here. Okay, so if we can get it pulled down there, then that will invalidate that cup. So we will be looking for that out of NVIDIA. QQQ starting to pull down. If that continues pulling downward on the day, that will help us fill out this inverse cup and handle, which should give us significant downside in the day. SPY starting to complete this smaller head and shoulders. So another signal of us getting ready to head down. Now our primary exit will be at the 738.80. Again, if you only have if you have a smaller portfolio and you only have a single put, just take the profit on that. Don't risk it. There's no reason to leave money on the table and then potentially burn a contract. But usually around that 20 mile exit, I try to exit about 60 to 80% of my positions. Position a hedge to the upside, which we will talk about that. So currently we have the 738 puts. Assume we pull that level, and I'm just going to get a big white arrow here that's super visible. So we're assuming to pull from the upper Bollinger down to the 20 mile, which we're about to hit any second. So our exit's coming within 40 cents. So make sure you do exit around that range. But from that range, if you don't exit that put, then what do you do? Okay, well, you have to hedge to the upside. That means that what would be the upside target from here? Well, that's 740, that the upper Bollinger. Um, so once we hit that level, pretty much right at this moment, you'd say, okay, my put is in the profit. I can now take a call to the upside. And that upside call currently is about 137. Okay. Well, our puts are 164 currently. So our put's going to be about $30 in the profit. I mean, obviously, um, got chopped up a little bit, but it's going to be about $30 in the profit when you take that call, which means that you're making a straddle. Okay, and what that really means is that you're taking a very neutral position at that 20 mile. Reason why you do that because 20 mile again is in between where the upper and lower Bollinger is. So at that 20 mile range, that is the perfect time to hedge the upside, hedge the downside. Well, what would the further downside from here be if you decided to take profit on that put? Well, it'd be that 737. So if you took that put profit, then you would have taken a call to the upside, a 737 put to the downside to target those Bollinger Bands. Okay. And again, the reason why you're doing that is because from this 20 mile, you're very likely going to be pushing to either the upper Bollinger or the lower Bollinger. It's not like we're going to sit here and chop at the 20 mile on the 5 minute time frame. Um, doesn't happen very often. So that's just one example, but I want to bring up some more examples when we go over long positions in a little bit here. DVIX still rising, so that's still telling us that dealers are hedging positions, and the HIG is still pulling downward slightly, so that is again another signal. And we are seeing NVIDIA invalidate the bullish cup here that they built earlier. We now have this inverse cup to the downside. From that inverse cup to the downside, we should expect a small bounce before continuing to head downward. Okay, sorry that cup looks beyond wonky, but it is a cup, or it is an inverse cup. Now, QQQ, very good. We're getting our downside rejection. I am looking for this to close all the way back down to the 709, or excuse me, the 707.94. From there, that would form this inverse cup to the downside. From that inverse cup, again at the bottom, we would expect a little bit of bullish structure before continuing to push back downward. So our selling of the day so far is looking okay. Semiconductors, that head and shoulders did complete, so that's awesome. That means our entry was very, very well timed. I haven't been able to check my positions at all yet, so I have no clue what's going on with my portfolio right this second. Um, okay, up a little bit. That's fine. Okay, but we are looking for a pretty serious downside here. Okay. Based off of everything I'm seeing so far. Now with SPY, and I do want to delete some of these arrows just to make this a little easier to see. Delete this head and shoulders because it did complete. But from the SPY, we are looking for this entire move down to the lower Bollinger, which would be the 737.41. Okay, once that occurs, that will fully invalidate the earlier bullish structure that we were building from yesterday's, after hours, overnight, pre-market. All that bullish structure will be invalidated. So I am looking for this inverse cup to the downside. Okay, so we're looking for that. Now I want to look at the VVIX here. It is continuing to pull up. So a lot of our signals are going exactly how we're wanting them so far. When to exit the SPY puts? Technically, you should have already exited some of them. Um, again, 80, roughly 60 to 80% of your puts should have been exited at that level. You leave the runners to run to the lower Bollinger if there's room. So if we're going to that lower Bollinger like I'm expecting, then it's at this 737.41 range that you will exit the rest of those puts. We're only 20 cents away from the level, so it's going to hit. So I'm going to be exiting my SPY puts here. Hold on 1 second. I do want to be very patient for that level. I'm not going to exit early. Assuming these contracts are going to sell for about 241 each. So I'm going to set a conditional order for the 737.42, meaning if the price goes underneath that, my puts will automatically be market sold. Okay, I'm completely fine with that. But we're waiting for our exit here. And we can enter calls from this exit. So we will be discussing that in a little bit here. But let's get this exit first and let's start seeing some of this bullish structure built at the bottom prior to that. Now, we did not fully get our exit yet. It did pull down to the 737.45. So I'm still expecting it to continue heading downward. Not really expecting it to start building that bullish structure just yet. If that's the case, then that is the second exit this week I've missed in under 10 cents, and I'll be really kind of upset about it. Now, for semiconductors, we talked about this 515 level earlier. Um, it's extremely likely we're going to be heading down there. We hit the 515.71, so a lot of selling is occurring. A lot of our bearish structure is happening. VVIX continue to pull upward, so 95.79. Very likely we'll be seeing it pull above the 98 today, which will be, a very major selling signal. SPY here, I'm still holding my puts. I exited some of them at the 20 month, but I am looking for that full move to the downside before fully exiting. Because again, at the bottom of an inverse cup, I expect bullish structure. So I usually expect it to push underneath um where that level is. Okay, so still have some downside. Yeah, I'll explain liquidity. Just give me one minute. I want to quickly go over chat. Good morning, everybody. Thank you for watching. I do apologize that the stream was started late and everything. Wasn't a lot I could do. My laptop was stuck in some wonky restarting cycle, and my mouse wouldn't work, my headset wouldn't work. Nothing was working. Okay, so let's talk liquidity. And I want to find something that looks really solid and easy to discuss. So I do have a conditional order on SPY here. So if that hits, then that will, automatically hit. I am going to be watching it on my phone just in case, but I do want to talk about liquidity. So liquidity is levels that the dealers see basically a lot of gamma at, and where there's a lot of delta that can be freely grabbed. Okay. When the dealers see the gamma is basically like, and again, I'm going to explain it basically like you're five, but when a brand new video game comes out, so, we're old enough to know about Halo, right? Um, when the first Halo games came out, people waited in line at GameStop literally at, you know, 10 p.m. the night before so that they can be some of the first people to buy the game. That's what gamma is, okay? It's that expectation of where your level's going to go. So when dealers see a lot of gamma, they see that, okay, that means there's a lot of delta that can be taken. Now, delta is basically the actual worth of the contract. Now, again, the contract is weighted by multiple different Greeks, but the weight of that contract is primarily dealt through the delta. Okay. Um, My options don't show well here. But let's just look at NVIDIA for a second to quickly explain delta. So on this 220 call to the upside, we see that the delta is 0.46. That means every dollar to the upside, you're expecting to get roughly $46 within your contract. Okay. So dealers see contracts where there's either a very high delta or extremely low delta. And as someone who knows how dealers work, I see that, okay, we have two massive delta levels here. We have a whole bunch of calls. We also have a whole bunch of puts, but we also have a whole bunch of calls here. This is all worth money. Okay. Burning this level is worth money, meaning selling high AV calls, burning them out with puts, selling high AV calls, and just completely killing the level is very, very, very profitable. Okay. This is literally billions of billions and billions of dollars of profit for these dealers. Okay, so this is liquidity. Now, what this is also telling us is that we have a lot of liquidity down here too. We have a lot of liquidity built here, but it's been completely just glanced over. Okay, that means that there is a large delta or a large gamma position starting to build here, and dealers are going to try to target that very, very likely. They're going to try to target that very likely by selling out the top, which means selling calls. Um, when dealers sell calls, it's a bearish position. They can sell calls to the upside too, but we will discuss that, at a different time. But basically, liquidity is big pools of money that are available. Okay. So currently, we have this big pool of money above us. We have this big pool of money below us. And on our daily time frame, we've been building liquidity in this range for what that was last July through basically March. That's worth a lot of money. Okay, there's contracts in there that are dated out for December. Um, there's all sorts of leap contracts in here that are waiting to be grabbed. Okay, whether they're calls, puts, doesn't really matter. Dealers want this liquidity level. So with us seeing that potentially this big pool of money might get sold out at the top, then what does that mean that they're trying to target? Means that they're trying to target right here. They're trying to get back into that liquidity range. Okay. Um, so that's one way to think about liquidity is that when we're looking at some of these smaller structures, we're trying to identify liquidity. We're trying to identify where the money is sitting for the day. For example, when we identified the bottom of this 737.06 or '03, whatever it's at, this is identifying liquidity. This is showing that there was a big chunk of liquidity right here built, but just immediately pushed out of. Well, why would you do that? Either you're trying to push the level or you're trying to get back to this range. Okay. Very likely this head and shoulders, which, you know, now we already know it's taking us back to this range, but very likely this head and shoulders was to build us down back to this range. Now that we're back in this range, you know, now we have to look at the next chunk of liquidity, which is moving further downward toward that next level. Next level on the SPY is basically at that 733.80. So that's one way to think about liquidity is just big pools of money waiting to be taken, um, or already built that can be, you know, profited upon. Okay. So gamma, we have a gamma tool in the Discord. Um, but gamma is a Greek on the on the I can't talk on the options. Um, so how gamma works is that you're going to see the gamma rise a lot closer to where the at the money price is, but you're also going to see it very elevated towards where the next level is. So let's look at the strikes here. Okay. Um, let's look at the gamma on the calls. The 741, which is basically $3 above, $3 below. So we're targeting fairly neutral in both stances here. The gamma on the 471 calls at 0.07. Okay, that's not very, very high. Um, but that is enough to start driving the market price there because usually a gamma will be far less. Um, so this is still a high gamma. We see the gamma even higher at the 740. So that means there's a lot of interest at that 740, but it's primarily at the 739. Okay, 738 starting to taper out just a little bit. 737 tapering out, tapering out. Okay, obviously those more in the money calls are not going to be worth as much gamma because people don't want to be buying super deep in the money calls usually. Usually they want to be targeting the out of the money stuff and trying to drive the price towards that level. Well, we also see with the puts, we see that the gamma levels on the 741 is actually fairly high. It's higher than the gamma level than at the um 3 or at the 736 call. So the upside gamma on this put is a lot higher, meaning that there's a lot more interest in the puts currently. We see that through the 740, which this is at the money at this point. Okay, so it's continuing to grow at the 738, and these levels are starting to beat our call levels. Okay, we start to see the 737, still a very high gamma. Okay, and that is, roughly a dollar out of the money, dollar out of the money on SPY, roughly the same amount of gamma, slightly higher, but roughly the same amount of gamma. So the gamma's starting to build towards this downside quite a bit, which means that people are starting to put in, bid orders. They're starting to set orders for that downside. Okay, that's really what the gamma is trying to identify. Yeah, so liquidity grab is, and we actually have a perfect example of a liquidity grab here, which was that candle the other day. Um, which one was it? I want to say it was when we went from right here. Okay, right here. This was the liquidity grab. So we saw this liquidity grabbed on both ends here. We saw this massive, massive shoot upward to the, what was it, the 501, something like that. We shorted that pretty much on the penny. Um, but the price was at or like 87 at the time, and within literally a minute it shot up to the 500. Well, that tells me, okay, they're very likely trying to shake out puts there. Um, because why would you push the price that high? Well, because there's this huge level of puts, you know, that need to be basically liquidated right there. Okay, they needed to shake everybody out of those puts, profit those puts, and then after hitting the bottom and being able to sell a bunch of those high AV puts, what did they do? Jump the price right back up to where they wanted to grab that liquidity to begin with. And from there, you see that this entire level just starts building. So they're building, they saw a lot of money there, whether it was contracts, um, starting to be bought at that level, or whether it was a lot of shares starting to be bought. Something was telling the dealers that they needed to shake out the puts, profit those puts, and get calls going. Okay. So they targeted the liquidity. It was very, very quickly above basically where the market was trading at. So basically pools of money. That's one way to think about liquidity is just pools of money. Where's the next pool of money sitting at? You know, on SPY, very, very likely at this red range. We're seeing a lot of structure building down and starting to push downward to this red range. Okay, we're seeing the bearish structure, um, really starting to kick in here, which means that what do you expect from bearish structure? You expect further downside. Well, that downside is very likely to grab all this level. So that's one way to think about it. Now, I want to look at the VVIX, I want to look at the HIG, just want to look at everything and make sure that everything is still going fine. So the hit or the VVIX is pulling down very slightly, so it's at the 95.31. NVIDIA here. NVIDIA, we did have our push down, completely invalidating the bullish cup. So we should be expecting, again, a very small upside before continuing to push downward. Our VVIX and HIG will be reflecting that, so just keep that in mind. Let's see the HIG. HIG is at 79.71, so it's been selling down quite a bit today, and it's building bearish structure to continue pushing downward. So that's looking very good. QQQ hit the bottom of that cup, which meant that we were expecting this upward handle before continuing to push downward. Okay, and that level to the downside is really at that 706.45. So I will just put a horizontal ray right on top of that so that that is very, very easy to see. Semiconductors, they did build this head and shoulders, did work on this inverse cup a little bit. Seeing a little bit of a handle starting to form here. I am looking for this 20 MA to reject downward and basically create this liquidity to continue pushing us down. All right, so I'm gonna take like 5 minutes because I need more coffee or else I'm gonna fall asleep. But our expectations should be set, and I'll get the note up on the screen again. Now, our long positions here, based on where the liquidity is headed, and then where the structures and everything are building towards, um, I'm absolutely fine with holding our long positions. They should definitely be pulling in the money um, within the next few sessions based on what has been happening with the SPY and QQQ and everything. Assuming we're going to continue our downside, then we will be, and this also still applies, by the way, the calls at the 737.03. Um, it's very likely we see this smaller cup and handle being used to close that larger cup. From the bottom of that larger cup, there is room for the calls. And from that call upside, hit the 20 mall, then back down to the lower Bollinger and also the rejection of the 5 mall. So if you have any questions, anybody, go ahead and type them in chat and I will be back in about 5 minutes. Let me just go ahead and make a note. See, it is 10:41, 7:41 for me. So let's just say 10:47. Gives me time to make coffee and have it blow up like I already did this morning and still make it again. So, okay, I'll be right back, everybody. If you have any questions, go ahead, type them in chat. We'll go over it. Um, yeah, today is going to be a great day to discuss all things. Don't worry about the Soxus calls being down right now. As long as you have duration on them. Again, the duration I have is for May 29th / June 5th. So I'm absolutely fine with those being down right now. When we did have some of this upside yesterday, um, I mentioned, well, not just yesterday, I mentioned that in chat yesterday, but also on Tuesday, we talked about how at this upper level, we need to be hedging um some or excuse me, at the bottom here, I'm thinking incorrectly. Um, at the bottom of these levels, we talked about hedging calls to the upside, and usually we were discussing these stocks as puts. Um, During these two trading sessions, we were able to get SOXS 11 puts, which if you could see the price of SOXS right now, that is heavily, heavily, heavily in the money. And delete that because we were expecting the push upward, not the crazy push downward. But that hedge that we got at this level, and we literally entered right there because that's where the upper Bollinger is. So we entered almost on the penny. Um, but those puts are now a whole $3 in the money. Okay. Um, for me, they're doing very, very well for my account, and it is basically absorbing the entire downside of the current SOXS calls. So that's the kind of theory about hedging is that you want to be able to absorb um whether the market's going up or down within your account without your account just blowing up. Um, a lot of people take just entirely one-sided positions, and usually that leads into portfolios blowing up because, right now we're in a very, very volatile market, and volatility doesn't just mean selling, it means buying as well. Volatility works both positively and negatively. Um, we'll have to change this because I'm discussing this at the moment. But but volatility works both in a positive and negative standpoint. So um, that means that we can be seeing major buying to the upside, which means that people are shorting volatility um, to bring that further downward. Or you can have people going long in volatility, buying volatility calls and shorting the market. So it works both ways, but people usually only track the upside volatility, not understanding that there is a downside volatility aspect to the market as well. Volatility is volatility. It means that you can have major bounces, you can have major dumps. Um, Volatility right now is very high. Okay. Um, so it's something to be concerned about on both ends, which is why it's super, super important that we're hedging our portfolios. Um, there's not much we can do when the after hours goes up, 2%. As options traders, there's literally nothing we can do. So we have to do what we can during the open market. So it's kind of like today how we took puts at the bottom. We were wanting to take calls or excuse me, we took puts at the top, wanting to take calls at the bottom. We're creating a hedge, okay? As long as we keep those positions going, which it's not really what we're doing here. But if these were dated positions, we would be. Um, that's a big reason why I told people to keep those 9 puts on Success, which if you kept those 9 puts, they would have went from being down, I think, what, 80% to now being in the money, now being worth money again. So, um, don't be cutting those hedged positions. They can really, really, really save your portfolio. Yeah, so all these success positions you're holding right now, we're not going to be cutting these out today. Sean, it's funny you say that because that's exactly why I really like trading the open. Um, because you can target those liquidity grabs really easily and just make a lot of money off of it. Okay, anyway, I'm gonna be right back. I need some coffee. Let me change this to 10:53 now. Okay, so I'll be right back in just a few minutes, everybody. Um, Coffee break, and I'll be back. All right, I'm back, everybody. Let's check the 5-minute time frame. We do have this inverse cup closed here. Looking for a handle from that. Push downward. Now, I do want to check the VVIX and everything again just to make sure. VVIX still has been pulling downward. Um, oh, we can check the sector rotation a little bit here. Now, I want to check HIG. HIG is still selling downward, so that is still telling us that we have a lot of downside here to go. QQQ, we do have a little bit of head and shoulders on the 1-minute time frame. And I usually don't care about the 1-minute time frame too much, but it does help to identify structure in here. So if this head and shoulders does take us downward, that will, you know, continue taking us downward on the SPY and everything else. So we're going to be looking for that. SPY here. Potentially we have a smaller cup built here. And from that can come a handle. So we are going to be cautious of that. But again, we do have this smaller inverse cup that has a head and shoulders on it. So we should be expecting a downside rejection. Okay, so we will be watching for that as well. And I did type in chat. I don't know if you all had a chance to read it, but I'm not really worried about the long positions we have. They're dated out for the next 2 weeks. Um, Depends on when you have them. Some are dated out for next week, some are dated out for 2 weeks. I'm not super concerned because we're seeing a lot of our structure telling us that we're going to be heading downward. Um, with that downward structure, um, we should be seeing, a lot of these puts that we have going back into the money. So not too worried about that just yet. But I do want to start seeing the VVIX pulling up. Um, that's going to be very important for the day. We also have oil pulling up, which, um, again, we've been looking at this larger cup and handle here. And while there's a little bit of a head and shoulders, it's starting to be invalidated slightly. So if we do see it fully invalidated, um, then, this is going to weigh against equities quite a bit. I want to check NVIDIA because I know NVIDIA was trying to build a handle to the downside, which right here looks very good. We have a smaller head and shoulders on the 1-minute time frame. Should take us down. Should see it pulling down to the 216.25. Now SPY here, we're looking for a rejection. Semis, we're looking for a rejection. Starting to get that a little bit. QQQ. See what's going on with our Qs. We are looking for a little bit of a rejection in here. So far, not getting it just yet, so it is starting to invalidate this smaller head and shoulders on the 1-minute time frame. This does create a little bit of a cup. So from this cup, we should be expecting a little bit of downside for a handle to the upside. But I am expecting this to reject downward. On the 5-minute time frame, however, this Head and Shoulders is still very strong. So even with that smaller cup, not too concerned just yet. UVIX still pulling down. On the 5 minute time frame, it can pull down all the way to the 94.55, basically that lower Bollinger. From that, I would be expecting a bounce to the upside, which coincides a lot with these um, smaller cups that we've been dealing with. For example, this inverse cup right here. We did expect a little down or a little bit of upside from that to continue pushing down. So we will be looking for further downside, some form of structure to tell us that we will be heading downward. Excuse me, I can't stop yawning today. Same with SPY here. Looking for the same amount of SPY. And I want to check the HIG. Then the HIG, seeing a little bit of buying. Has not, excuse me, really can't stop yawning. Has not fully completed that cup, but it's only a few cents away. Again, I am looking for this to reject off of the 20 mile to the downside. And I want to see oil prices still looking strong. So we'll see if we get our downside rejection or if it turns into more of a cup and handle to the upside. A lot of chop though. Technically there was two really good trades today. We did take the second one. There was the call entry available, but we did not take that. Um, just because I did not feel comfortable taking that call entry there. Looking for Nvidia to start breaking down. Looking for semis to continue breaking down, which they're looking very good to do so. The ADL is starting to taper out on semiconductors. It's looking a little strong on QQQ. It was pulling down. It's almost back up to the high of the day. But if we do start seeing that taper, then that will pull down very quickly. SPY here, a little bit of a taper in the ADL. We had it pull upward quite a bit earlier, but it's been somewhat struggling. No, I did not send any private messages, so there's somebody malicious within the group who has something set up to basically target every new member that joins the group, which I'm really trying to figure out a solution how to prevent that. Um, but it automatically messages you and tells you that, oh, hey, I'm gonna invest or come invest in me, blah. It's there to steal your money, so literally don't respond to it. Report it to Discord. I'm literally trying to find out who it is so that I can get them permanent banned and get them like hardware banned off Discord because what they're doing is fraud. No, they have not scammed anyone in the server that I know of, but just be super aware of that. Unless it's coming directly from my account, it is not real. Have to be super careful with that. Yeah, let's take a look at applied. Um, one sec. I just want to make sure we're getting our full downside here on SPY and everything. I'll be happy to go over that though. Again, I really want to see a bounce out of the VVIX here. Um, I want to be seeing dealers hedging and not just um, swapping sectors. I want to see actual hedging to the downside because that's how we get our large selling days. Big still selling, so that is a good signal to the downside. QQQ starting to reject that 5 mile, so excuse me. That's a good signal to the downside. Semiconductors still doing their thing, looking to close a lot of these bearish structures to the downside. And SPY starting to close a lot of that structure to the downside too. Okay, so our selling's looking very good. And remember, we're at a very, very key level right now. It's the last thing I'll cover, and then we'll go over applied, I promise. Is that on the daily time frame, we are literally right at the 5 mile. Okay. It is at 7:38:20. So a rejection of this 5 mile on the daily time frame is going to be extremely bearish. Okay. Now the reason why it's going to be so bearish, and let's just go over real quick, is because there's something called the moving average weave, which something I've coined, but it is something you could back test and it is very, very real. So essentially the 5 mile has to be tested in between each and every move, whether the 5 mile is, above the market price, below the market price. So let's kind of go into what happened here. And we have to go back to some of these um, upper Bollinger rejections, but we're even going to start back even further. Let's go back to here. Okay. We start pushing above the 5 mile, have a little bit of 5 mile testing in there, and again, we expect to test the 5 mile once every 5 sessions. Sometimes the price will get glued to the 5 mile, which that shows indecision by the market, but from that indecision, we had a 5 mod test, which led to a 10 mod test. Okay, that 10 mod test was bounced off of, which led us to another 5 mod test. Okay, from that 5 mod test, we now are within the upper Bollinger, rejecting that range, get a 5 mod test again. Now we're back up to the upper Bollinger again, retesting that range, rejection back down to the 5 mod. From that 5 mile rejection, we go back to the 10 mile, reject the 10 mile, still rejecting the 10 mile, and then what happened? Right back up to the 5 mile again. It looks bullish, but what happens from this 5 mile rejection? 20 mile, because that's the next level. Okay, so that's one way to think about the moving average weave. That's what I call it, is that the 5 mile has to be tested in between each important level. And sometimes it can be bullish or look very bullish because that meant that we had to pull up quite a bit. Um, Technically, we had to pull all the way from way underneath the 10 mile to pull back up, retest the 10 mile, retest the 5 mile, and head back downward. Um, but that's how you get your moving averages really expanding to the downside properly. So heavily, heavily expecting again that 20 mile move. Yeah, it's it's some guy out of China, and I really need to get in contact with an actual Discord, like actual Discord moderator that can join the server and target their IP and really just knock them out because it's been something we've been struggling with the last year and a half now, maybe even 2 years at this point. Okay, we are getting our downside. So remember with SPY, okay, we will be trying to target calls at that 3, or excuse me, the 737.03. Okay, so remember that. Once we get to that 737.03, that is a call entry. Okay. Um, Again, this is closing a very large inverse cup. From the bottom of this very large inverse cup, we should be expecting a very slight bounce before pulling back downward. Okay. So I will be targeting some calls from that, again, the 737.03. Um, Likely we're going to pull down below that to the lower Bollinger, but that's the level I will be targeting. And we'll be writing those up to the 20 mile. These calls are going to be the 738 calls. Again, they should pull very much in the money and be a really nice contract to the upside. So waiting for our entry here, and then I'll go over applied. I apologize. Not trying to skip it. I promise. But I want to see our entry. I want to get our entry. I want to get our calls going. Now, those success calls that I got so far are up a whole 34% from this morning, which, doesn't mean a whole lot yet, but we're expecting much further downside. So those are going to run extremely, extremely, extremely hard when the time is right. Waiting for our entry, and then I will be very, very happy to look over applied, not split. Applied. I used to have that on my watch list. I don't know why I don't anymore. Oh, did it already touch? Oh my gosh, the low of the day was the 737.03. Don't tell me I missed that. Well, there you go. You know, that shows how precise some of these levels are. Um, this is one of the umpteenth times since streaming over the last, few months where we've hit something literally to the penny. Um, Unfortunately, I didn't grab my calls, so price needs to go back down. Need to go back down to that price really quick, build some bullish structure, and allow us to get our calls to the upside. Good morning, Silver. Okay, push us down, let us enter our calls. Makes me laugh. Makes me a little salty at the same time because literally called that play out, and yeah. Anyway, let's look at applied, whatever. Applied digital. Okay, so you're creating this cup up to the 47.80, almost, almost certainly. And what does that lead to? That leads to a very small handle to pushing the upper Bollinger. The upper Bollinger is currently at the 49.33, but by the time you pull up this 79.70, I'm gonna call it 79.80 so I don't go crazy. 79.80. Once you pull up to that level, the upper Bollinger will be expanding to the upside, so I'm fully expecting that 50-51-ish range. But you should be pulling down. We do want to see the 5 mile start crossing above the 10 mile again, so that pull down to retest the 5 mile would be super, super, super ideal. And that would be a really opportune call entry on those basically 48 to 49 calls. I would take those out for At a minimum of a month, okay, just because this is a little bit of a smaller symbol, it can trade a little bit slower. Um, but that move should be very solid. We also have a cup formed here too. So from this cup, from the smaller cup or nested cup, and from this handle on this nested cup, we should see above that $50 range. Okay. Looks very good. Looks very good for an upper Bollinger move. So again, upper Bollinger secures the level on the day one. Day two, you expect a higher high and then to start downward consolidation. So that looks very nice. But definitely wait for bottom of that smaller handle to form. Okay, let's see how bad these spy calls are ripping on us that we weren't able to buy. So bad. It's okay. It happens. Ah, yeah, I could check out WD. A nested cup is a nested anything is that same structure within that same structure. Okay, so if you have a nested head and shoulders, that's going to be probably like one of these shoulders or the head or something. It's kind of like on the head right here, how you see this, even though you do have that candle pushing upward very greatly. But you see how you have the liquidity here for this head and shoulders within this larger head and shoulders? This would be the nested structure. Okay. Now you can have multiple nested structures within each other. Um, Literally we've had some where it was like a nested handle on a cup or something like that, but we try not to, drag it out that much. Um, Identify the main structure, identify the nested structure, and from that nested structure, where the next movement's going. Okay. All right, let's check out W Day. I'm so mad about that call. Hold it up to the penny. Okay, I want to go to the weekly time frame. So on the weekly time frame, you're actually at a very, very, very crucial level. And this is actually a very bullish level. Okay. Looks like massive downside, but um this is how you get massive, massive upside. Your bear structures have already completed. Okay. Um, and we know this by just looking at the liquidity. Bear structure one, already taken. Bear structure two, already taken. Bear structure three, already claimed. And what are we seeing at the bottom of this bear structure? Exactly what we're looking for. Bullish structure. Okay. From that bullish structure, where does this price like to trade at? See all that liquidity? You're very likely heading back up there. Okay. Um, this wasn't the most opportune buying opportunity, but it is very, very close. Okay, it was basically at that 110. Um, Very, very close to as opportune as it gets. The upside is quite large right now. And that was the weekly time frame, remember? So on the daily time frame, you have heavily consolidation within the moving averages and Bollingers. You do have bullish structure starting to work its way out. So you have the cup getting ready to form the handle. Looks very good to the upside. Um, This is the type of trade where a December, basically a December 200 call. I don't know if they have those. Yeah, they do. Let's see. Always struggle with Weeble on this. Let's see, 20 straight. And of course, it's not even going to show me 20 strikes. I would try to take essentially that leap 200 call to the upside. Um, because I think you're going to enter that liquidity range and profit quite a bit from that. So that looks really nice. Now let's go over the market, see how much I'm regretting not getting those calls. Okay, not so much anymore. We do have this cup formed from literally the penny. We'll see if we get the candle breakout. Well, I'm gonna say that we called that entry. I didn't take it because I was busy looking at everything. Um, but I'm sure you all can say that I very accurately called that entry. So two very good trades today so far. We're still on those success calls, which are doing very well right now. Um, just working on additional bear structure to the downside. Now let's check our VVIX. Again, we want to be seeing this pull upward. This is nearly at the daily low, which that also creates conditions that are very bearish for the overall market because at the lower Bollinger, what do we expect to happen? An upside bounce. Okay, which an upside bounce in volatility is telling us that the rest of the market wants to sink. So yeah, just waiting for additional structure and everything to play out. I want to see the HIG. HIG's still selling, so that's fine. Currently at 79.69. And Nvidia continuing to work on that bearish structure. This bearish structure being more so this double top right here. So we do have this inverse cup formed. From the inverse cup, would be expecting the handle. Now, even on that handle, 1 minute time frame, we see that there is this double top starting to form here. So it should take us down, but we will see. And again, I am targeting that 216.25. That was the candle from the earnings yesterday, where it had that massive pull down. Those candles matter. They're not just done out of spite. I mean, they're levels we can target. So that is a range we're targeting. UQQ, we see the ADL pretty high right now. Seeing a little bit of an upshift as well, but again, we were expecting that to happen. Um, even on semiconductors here. Go ahead and just delete some of this, but we did close this inverse cup. And from that inverse cup closing, again, we do expect a little bit of bullishness to grab that liquidity to head downward. So we are still looking downward throughout the majority of the market, looking for our volatility to start picking up instead of continuing to push downward against us. The video, it does look like that 1 minute nested double top is going to play out, but we will keep our eyes on that. Pig still selling. We're basically just waiting for volatility to turn on. We're waiting for the dealers to start hedging positions, which they're not ready to do that yet. They want to build those handles on those cups first. From those handles on those cups, then we can start really anticipating the volatility pushing upward. We also again have this lower Bollinger to contend with. So with that lower Bollinger, we should be expecting that upside bounce. Yeah, so I'm going to something we're already working on, but we're working on an actual onboarding process for the Discord, which should really eliminate um any of those scam bots or anything from messaging you. Um, that's going to be happening this weekend. So I am working with a couple of the engineers on that. So should be done very soon, and along with the rest of the server looking a lot better. Um, I know you guys can't see the new learning area yet, but it looks really, really, really nice. It has modules set up. It's going to be really great when I get it finished. That won't be done for a while, but at least the overall structure of the Discord should look far more professional and should look, and should be far easier to navigate. Plus, they'll have that onboarding, which will be in the Discord, not a bot messaging you or something, but it'll be in the Discord where you can physically see what steps, you need to take to, you know, sign up or whatever it might be. Yeah, you're very welcome. Yeah, W Day looks super good. But definitely get those contracts that are dated out. And I want to look at those on my phone actually because I know it wasn't showing on the computer very well. So W Day. And again, it was those December 200 calls. Yeah. And if you do buy those calls, do not put a market bid in because the spread is very large. Okay. Um, the bid is basically at 490. The sell is at 690. Okay. Um, or 4.9 and 6.9. You want to put a bid in between the middle of that and try to catch a middle bid. Um, but that's a super good contract. Basically spending like probably about 570, $580 um for a full $80 upside is unheard of, you know. So that's a super nice contract. I might take them, not sure yet. I really don't know what the company W Day is, so I just know the technicals. Now I need to turn on a heater because like I am absolutely freezing right now. So give me 1 second, everybody. I just need to plug my heater and everything. Yep, so this parallel line, super, super, super crucial level. Again, this is the daily time, or this is the daily 5 mile. So I should really hold on 5 mile upper bounds. We'll put that center and under. Maybe not in the center because I don't think it'll show. Never mind, yeah, it will. So we'll do that. 5 mile upper bounds, 5 mile lower bounds, and the actual 5 mile. Sorry, I had to capitalize the. So you see how our price action today has traded almost to a T from the top of this level to the bottom. This is a 5 mile test. Okay. This is the hallmarks of exactly how I expect a 5 mile test to occur. I expect the upper bounds of that level to be tested. I expect the lower bounds of that level to be tested. I expect the actual 5 mile to be tested. From that, we're looking for the structure within these ranges. Are we going to see bullish structure to the upside, or are we going to see bearish structure to the downside? Because that's going to be super, super, super indicative if, we're going to be pushing downward towards that 20 mile or slowly start pulling back upward and trying to reclaim that upper Bollinger on the daily time frame. So it's something I track with every single moving average, whether we're doing a 20 mile test, a 200 mile test, doesn't matter. I always look for roughly that $2 above and below to kind of define the entire moving average range. You're actually not going to be too far from where I am. I'm near Portland, but on the Washington side. VVIX pulled down to 94.12. It is back up to 94.24. Again, this is not where I want it. I want it up towards that 98 today. I want to see dealers actually positioning um, hedges to the downside. Our VVIX is still sinking, which is telling me that very, very likely, and we're trying to target this downward liquidity here. And with the big sinking, that is telling us that extremely likely we're going to be seeing the selling out of equities like we anticipate. We're seeing the bearish structure continuing out with Nvidia. Remember how we talked about that double top when we talked about that smaller nested double top? The nested double top is playing out, so we're going to see this pull down basically to that 1805. From that 1805, that then creates an inverse cup. So we should be looking for a very small handle to the upside. Again, this is a 1 minute time frame, so not a whole lot of price action. But from that handle to the upside, we should see the pull down. Okay. And this is kind of what we're looking for throughout the majority of everything right now. Um, Semiconductors are currently at 516.98. That low target we're really looking at today is basically that 514.41. So it's looking extremely likely from that 514, we should be looking at that 513.38. So again, it looks super, super, super good to the downside. The only thing that's even remotely concerning to me is just the VVIX. Um, but currently with how much the market has been chopping, we could be seeing a lot of rotation rather than actual just selling to the downside. So until dealers really start seeing that downside gamma picking up, I need to charge my phone. That downside gamma picking up, the the deltas start building and everything, they're not going to really engage on that too much. Um, but once they do start seeing some of these levels broken, I do think that we will be seeing the dealer hedging picking up very, very, very quickly. Okay. On the workday play, technically it's fine to enter. It's fine to enter right now. You can wait for that smaller cup and handle to form, and try to take that handle, but it's an absolutely fine contract right now. Um, I used to live near Phoenix too, and all over the West Coast. I lived in Yuma, Arizona for a while, which is basically actual hell on earth. One summer I was there, it got up to 131 degrees. I think it was a record-breaking temperature at the time. Well, still looking for the breakdown in the video. There's a little bit of that handle that we talked about. Sorry, I had to mute for a moment. My wife's not feeling too good. We still have the flu. Doesn't sound like I have it, but I've been having really, really bad body aches and everything. Waiting for our VVIX to pick up. Our Hig is still selling. While there's actually a 2,500,000, 2,523,000 share buy on Hig, which is absurd. That's a lot of money. Dang. One of the larger buys I've seen on Hig. That's actually super impressive. Which that kind of scares me when I'm seeing the VVIX so low today. In fact, that's kind of scaring me a lot because that was an absolutely absurd share buy. 2.5 million shares. I mean, dang, that's almost 160 million. Yeah, that's a little concerning. I won't lie. That's a pretty massive, pretty massive buy right there. Pretend to Yuma, yeah, that's how hot it gets in the summer, basically. I know, not that hot. It's just a joke, but it does get to like 130 and it's just absolutely disgusting. So I want to see our volatility bouncing extremely soon. Um, that share buyout at Hig was something else. It's showing as a massive red candle. Um, but it came through on my time in sales as a buy. I don't know if that's them trying to sell calls. That could be, potentially like 2,500 calls or whatever. Um, but that's scary. That's really scary. I've never seen that on Hig, and y'all know I watch this like a hawk. That's great. I love to hear it. And that's one thing like everybody needs to, I guess, not worry about so much is that if we trade well, we're going to get green portfolios. Okay. If we target our buys and sells at the correct times, if we have very structured trades, we're going to do well. We just have to follow the rules. And sometimes those rules don't make a lot of sense. It's kind of like when we bought those 11 puts the other day on Success. Um, we were very bullish or very bearish on the market. Um, but we have to be hedging positions. We have to be taking those entries and actually holding them, um, allowing them to do the work that they need to do. And I promise you, your account will eventually pull into the green. Um, the big thing that we really try to focus on here is not losing money. Okay. Um, so don't be selling contracts that have a lot of potential just because they're down a little bit. If the liquidity is pointing downward, then there's no reason to sell it, because very, very likely that liquidity is going to take us right back down. So a lot of these puts that we have right now that are dated, that are red, I'm not concerned about. Um, again, we have kind of all the liquidity necessary to push downward and make very well out on those puts. And our levels are heavily suggesting that we go to that 20 mile. Um, Again, last time this level was tested was April 8th. Um, Usually you should test that level every 20 trading sessions. That's easily over 30, 40 sessions now. Not counting it exactly, but we are very, very, very due for that to occur. Now, Nvidia is seeing a little bit of a bounce, looking for a rejection off of this 5-minute 20 mall. The ADL is still very poor, so I'm not expecting a whole lot out of that. Now, QQQ, the ADL is rising, which again can be a signal that we're going to start buying upward. SPY, the ADL is still chopping a little bit. It's starting to pull upward a little, um, but we're still very much so within bear structure, so I'm not too worried about that. Basically, the only thing I'm worried about today is the VVIX. The fact that we're not seeing this starting to shoot up just yet is extremely concerning, but there is a lot of structure we do have to chop through still throughout QQQ, semi, SPY, excuse me, which means that until that chop's really, kind of finished, then dealers are probably waiting on their positions. Because what chop really means outside of, algorithmic trading, right? What chop is saying is that there's gamma to the upside and gamma to the downside. There's delta to the upside, there's delta to the downside. It's trying to pick a direction. And with our tools and with our skills of being able to identify structure, we know how to read what the machines are doing a little better. Sorry if it sounds like my voice is cracking a little bit. Give me a second. Yeah, the thing about that HIG is that share purchase was absolutely huge. Very, very, very concerning to me. Seeing basically, what was it, 2.5 million shares. Now, what could be happening is that could have been all contracts being sold into the market, okay, which would look like shares being bought up in the time and sales. That can happen. That's probably something I need to look at the options here for really quick because that's something we should be able to see. Probably gonna start looking out towards December and see what's going on. I want to see what date that they sold all these calls for. There was a lot of July calls sold today. Same with the puts too. Oh, yep, there we go. It's that 2.5 thousand volume on the 80.5 calls. So they're selling those as a hedge. I think that actually helps our bearishness here. It's just very tricky. The only issue is that again, VVIX has to be pulling upward. Okay, until we see this pulling upward, this is telling us that dealers are not hedging positions. If positions are not being hedged, then we absolutely can pull to the upside. We still have very bearish structure. Okay. We still have this cup closed to the penny. Okay. From that cup being closed, or the inverse cup, excuse me, we expected a small bounce. Okay. Now on the 5 minute time frame, we're almost in the upper Bollinger, so this is actually going to be a short entry. The upper Bollinger is at the 739.66. We're at the 739.60. So technically, this is a very quality short entry. I am trying to let it push up slightly more before I enter, but I am going to be looking to enter that. And I am going to be looking to, did I say call entry? I meant put entry, excuse me. Um, and then we are looking for VVIX to start bouncing to the upside. Okay, but this is a very, very good put entry. I think I said calls. I don't know why I said that, but very, very quality put entry. Okay. Um, because this is still very well within our bearish structure. Same with this. On semiconductors, we expected this handle to the upside. Not giving us an entry yet, but if we continue seeing this upper Bollinger pull downward, then that would give us a very quality entry. QQQ is giving us an entry, so there is room for puts to the downside. I would be targeting basically those 709 puts. On SPY here, I want to target the 708 puts because the 20 miles at 708.67. So even in the worst situation, pulling down to the 20 mile will get us into profit on those. Now we are watching very closely to see if we get an entry into semiconductors. Now I already have a whole ton of semiconductor shorts going, so I'm not going to be taking more, but that will be an entry. Um, Looking for that entry could definitely you know, um correlate to SPY and QQQ pulling downward. Okay. But technically QQQ and SPY has already given us the entry. I am currently in the 738 puts. IG is continuing to pull downward. And we just need to see our volatility moving to the upside. Um, but I want to look at sectors really quick. Uh, So utilities is gaining today, dollar is gaining, healthcare, tech's gaining a little bit, and communication services. Staples losing the most, industrials, real estate TLT, consumer discretionaries, energy sector. So utilities are the main gainer today so far. But we do have XLV up pretty well today. Daily time frame though, it is exiting an upper Bollinger move. So that could be very good for the bears, showing that, tech is ready to pull down. So a little bit of sector movement going on. Group symbol A to Z. Okay. But let's go ahead and check back to the QQQ and everything. Yep, our put entries right here are very, very solid. The put strike is 738 0DT. So typed it in chat. Yes, I have. Yeah, talking about inflation. Um, oh, also, hey Anna, welcome. But talking about inflation, seeing how pretty much all of the Fed doves have been, you know, ousted, there's a real chance that we have the situation where the Fed talks about rate hikes for a while and then they just go full bore and really try to just kill inflation. Um, Especially now that Howell's not at the chair anymore. I think that gives him a little more leverage to do the work that he's been wanting to do this entire time, which is really just being an absolute hog. Um, so there's a real case that we could be seeing the hikes or the rates hiked 2+ times this year. We're seeing the VVIX ticking upwards slightly, so a little bit of dealer hedging. This does coincide with our entry, so this is looking solid so far, but I want to see some real, some real manpower put into this thing already. I want to see some real oomph already. The Hig is still pushing downward. Nvidia looking like it wants to reject that upper Bollinger on the 5-minute time frame. Hig seeing a little bit of rejection, which is good because this rejection here invalidates this potential bullish cup. So if we continue rejecting, that's going to be very positive for the bears. And VPIX still just being lame. Yeah, let me take a look at ARM. ARM, ARM. Oh, dang. We traded this a long time ago, as you can see. This was back in 2024. I remember when it first IPO'd though. It was like 40 something. Yeah, back in 2023. So it's back within its buying channel, which that means we can extend this back from when I originally created it back in 2023. Heading well above the channel. Now, with ARM pushing as hard as it is on the daily time frame, one thing we do have to consider is that we have the day one Bollinger or upper Bollinger, which means that the day two we expect a higher high into downward consolidation. So that same expectation should be very well in place. Even though you're seeing a lot of bullish price action, you should be seeing that, but it does come down. That's what happens with upper Bollinger moves. You get the day one upper Bollinger, day two usually start pulling down after that higher high. Buy still holding my puts, still absolutely fine here. And the only real concern I have on the day is that our volatility is not picking up, which as long as that's happening, that's telling us that dealers aren't hedging for the downside. If the downside doesn't get hedged, then eventually that's going to likely turn into buying. Yeah, puts on ARM. So day two upper Bollinger is the entry on puts. Okay, I mean that is literally when I enter my puts um on the daily for using the daily time frame. Um when we have the upper Bollinger day two, which we haven't seen on SPY in a while. But ARM, these puts are very, very good. Um However, I would be targeting the 5 mile. Now, currently the 5 mile is at the 234. That means, the 5 mile is going to be pulling up tomorrow. Based on where we close today and assuming we close basically at the 286, right? Just put a decent number there. Well, what does that mean the 5 mile tomorrow is going to look like? Well, the 5 mile tomorrow might be all the way up to like the 244, 245. So what type of put should you be looking for? Probably about that 250. Okay, that 250 should really land within that 50 or within that 5 mile range. Um, a 260 is going to land there a little bit better, but the 250 should land within that range. because that is the next range from this level. Is pulling down, retesting the 5 mall, either heading up or downward from there. So I like that a lot. I would try to get that out for about 2 weeks if you decide to do that. Seeing rejection of that upper Bollinger here on the video, which should give us the bearishness to the downside that we're really expecting. Should break a lot of this chop. Was my price on the 738 puts? I currently have a 0.65 average on them. Sorry about that. I was talking to my wife. So let's take a look at our VVIX. It is still not moving. Still have not completed this cup yet. PQ is starting to pull away from that upper Bollinger like we anticipate. We're expecting that out of the SPY as well, so where's the SPY at? SPY is still not formed this upward cup either. So I will be holding these puts currently. Again, I always keep my puts on the upper Bollinger. Kind of like up here when people were getting a little shaken. Um, our entries are back tested. They're very, very quality. Um, I stick to my guns, so I hold those puts and I'm gonna let them do their work. Just don't overcommit. Um, it's like I was talking to a certain member that I'm working with, and they like to add a ton of contracts. They would basically just keep adding contracts, um, and it got to the point where it was almost gambling. Even if the entries were good, if anything wrong happened, they would have been, absolutely blown out of the water. Okay. Now, in their case, they got really lucky. They had all their calls that they kept loading at the bottom uh, during our very quality entries absolutely launched one day and they turned that into a ton of money. However, they were down before that. Give me one second. They were down before that almost $3,000. Um, and that's not what we're trying to accomplish here or trying to achieve. So if you have a small port and I'm talking about $2,000, okay, a roughly $2,000 port, you should really not be entering more than 2 to 4 options per entry. Okay. Ideally, you should keep it at 2 while you have a very small port. Okay. The reason why you do 2 is because one, you get the first entry at that 20 mile, lock in a lot of that profit, and then you get the chance for that to run, the runner to run and make a lot of money off of that. Um, but each entry, you want to keep your contract um, blocks within the same limit each and every time. Make that law, make that a rule. Um, because if you don't, I can almost guarantee you will blow up your account someday. Okay. Keeping your options buys within blocks keeps it very controlled, and it gives you a lot of room to maneuver both the upside and the downside against them. So it's not about hitting massive home runs, even though the potential's there. It's about being safe with your trades and growing your portfolio. Can't grow your portfolio if you're, taking an absolute boatload of options or overextending your, what you can actually afford. Whole goal is growth. Doesn't matter if it's, $10 a day, doesn't matter if it's $100 a day. Whole point of trading is to keep growing your portfolio. Yeah, and I don't want you blowing your account up. Of course I do. That's why I'm telling you that. Today's a really weird day, primarily because the VVIX is pulling down. But we're seeing that happen. The HIG was pulling down, it pulled up very slightly. It's a tough day with a lot of chop, I'll say that. But we really need this level to break. It's basically this major consolidation range. That needs to break. Whether we head to the upside or downside, market needs to make a decision. We really do need to see the VVIX moving up. Now, with our current puts, even if we see a little bit of an overextension on the Bollinger here, I'm not worried because if this forms an upward cup, that's still fine because we still would be entering puts at the top of that cup regardless. So those previous puts would still be okay. Again, the primary concern I have on the day is that our volatility isn't picking up. Um, but it doesn't mean we can't have a selling day. Um, we had that one selling day where the VVIX went from 98 all the way to 91, but the market was down, what, almost 2%, something like that, because it was a massive market rotation that happened, rather than dealers hedging against their equities. Excuse me. But that's also what we could be seeing here, is that we could be seeing a rotation rather than dealers just actually hedging against the downside equities. A little too soon to say. Obviously, we do have to break this chop to really determine that. But it's not a good signal when you see the VVIX continuing to pull downward. Um, Especially as someone shorting, this is very, very, very concerning. Yeah, it looks like it wants to fill that cup to the upside, but it can also reject it too, which is a very large possibility because we've already technically tested the upper bounds of the 5 mile. Now, with a 5 mile test, and let me just make this white so it's easier to see. When we test the upper and lower bounds, we expect significant price action throughout that range on both the upside and the downside. We've had that on the downside so far today. Perhaps this is where we start seeing that on the upside a little bit. Um, but this is still a level that is being tested. It's still far too soon to say that we're balancing or going to have a sell down off of that level. We need to see both sides tested and we need to see continued structure, determining one side or the other. So far, this cup has not been validated, and because of that, this is still very bearish. Okay. And even on semiconductors, we'd have to pull up almost a whole $5 currently to invalidate the current bearish structure. Um, which we can do. We could do that definitely, but that would mean that PQQ would probably be running to this 114 again. SPY would be, excuse me, SPY would be running back up to that 742, 743 range, which is that the type of buying we're seeing right now? Not entirely. Again, kind of the only concern I have is that the VVIX is low, but this can change very quickly. Um, so yeah, it is a little bit of a difficult day in terms of that. No, I don't think the puts were a bad deal. Again, my entries are very, very clean, and I say that without ego. I say that because literally done like thousands of these trades now. Um, I know they work. They've been back tested. I know my entries are very solid. Um, I have zero fear about these puts currently because again, even if either we're gonna push up and fill these cups and then head down, or we're gonna reject the cup and head down. And if we reject the cup and head down, what happens? we create a head and shoulders. So it just turns into further bearish liquidity. So I really like those put entries. That's something I stand by very, very much so is my entries. Um, my entries I've been working on extremely, extremely hard. And as you can see, it's starting to work out a little bit. I try to keep as much emotion out of the trade as possible. Um, my technicals tell me when we're above the upper Bollinger, that's when we take puts. When we're below the lower Bollinger, that's when we take calls. I'm going to stick to that to the T. Um, kind of regardless of what's going on, just because do you know it works extremely well. See, told you. I know it might sound like cockiness or ego or something, but it's something I've been very, very specifically working on for an extremely long time. Um, and it's something I stand by very much so. Usually the trades that go bad for us, which even then we usually are able to pull at least back to neutral, meaning basically back to the price of the contract. Um, is if we continue pushing against this upper Bollinger, right? And then we continue having to take puts. That happens, but that's why we kind of take them in those blocks. So, for me, I take usually about 4 puts at a time. Sometimes I take, up to 16, 20 puts. It really depends, but you know, um, I keep them usually within blocks of four. So whether I do 20 puts, that's basically 5 blocks of 4. Um, But then each time I add to that, I'm only going to be adding 1 block, which means 4 puts, 4 puts, 4 puts. Each time we push that upper Bollinger, basically. So if the price went above right there, well, I would add more puts there. We pushed up again, I'd add more puts there. Because eventually, this will pull down. And we've seen that happen multiple times now where we do get those pushes against the Bollinger like that, where it does look very dicey, but you just have to continue adding to those positions. Seeing a little bit of movement on the VVIX, but nothing remarkable yet. We need to see like $5 of upside pretty much. Nvidia is still holding its bearish structure, so that's looking good. Big still tapering in here. Spy doing spy things. Currently, I have 20 puts. And I will exit basically 16 of those at that 20 mile, which is, you know, 20 cents away. Leave the other four to run the lower Bollinger or, back down to that low of the day. But that way I secure profit and those four extra puts are 100% paid for at that time. So if they run to zero, big deal. If they make a lot of money, then even better. Yeah, even on zero DT, I continue to add. Um, so these are zero DT puts that I have currently. Currently have 20 of the seven 38s. If we push upward and we push above the upper Bollinger again, I will add another four. If we do it again, I'll add another four, and I'll do that literally until close. You know, because again, that's what the straight or that's what my strategy. I can't talk. That's what my strategy um is back tested for. It's back tested for extreme consistency. Um, in fact, I haven't seen many other traders have this type of trading style where it's this consistent. Um, but this is back tested. It's built to be an extremely safe, consistent trading style. I mean, this is the type of style I would trade or I would teach a prop firm, um, or a trading floor if I was running a trading floor. This is the exact style I'd be teaching because it's insanely consistent. Um, Even on bad days, it's going to usually pull you to a neutral position, meaning if you invested $600, you're usually going to get that 600 back, um, rather than a loss. Usually I start with four, but I consider this a little more of a higher conviction trade, so I did take 20. But I keep my blocks in four. So how I'm thinking about it is I have 5 blocks of four. Okay. Rather than I went out and just willy-nilly took 20 puts. I decided to take 5 blocks of them. Okay, so we are getting ready to have our exit. So I am exiting 16 of those. And that's super awesome. I made $30 profit per put right there. And now I have my runners running. If my runners are going to run all the way to the low of the day, that's going to take a trade that gave me roughly $500 of profit into, potentially over 1,000. Um, and it's super safe. Super safe. So the uh, PDT rules that are changing are basically, um, it's kind of like how margin accounts are right now, where you can continue entering back into trades as long as you have the funds um, within the account, and you're not going to sit there and get the whatever they're called. It's been years since I've gotten one, so I don't remember the name. Is GF or GFV something something violation. Um, but I used to think it was going to be a $2,000 limit for the account to do that, but for Webull, they're going to do it for every single account. Doesn't matter if you only have a dollar. It's going to automatically become a PDT account. That doesn't mean that they're going to turn on margin for you, but they are going to marginalize your funds. So they're not going to screw you over by having you locked in positions and things like that. Yeah, good faith. I do see SPY dropping pretty heavily. If we can break today, if we can break this 5 mile range, then we're absolutely heading lower. I sold 16 of them, remember? So we take it right at that 20 mile. The other four are doing very, very well right now. Okay. I'm letting those four run, and ideally, we will push down to the low of the day. If not, then I'll probably cut them once we get to the upper Bollinger. Maybe not. If we get up to the upper Bollinger, I'll probably just add more of those puts at that point. Um, and probably take it back up to the 20 contracts again. So technically already extracted all the profit from that trade. Um, I won't say all the profit, there could be money on the table still. But this trade's going to be 100% win regardless. Those puts that I have currently could run to zero, and I'm still going to be up, 300 something dollars. Okay. Um, that's why we use our 20 mile exit for at least 60 to 80% of those positions. If you are a smaller account and you only have two contracts, then you exit one contract there and you let the other run. Um, again, it's all about locking in those consistent wins because that's how you're going to build your portfolio up. The DAO isn't really something I care about too much. Um, so I don't track the ETFs or anything for it. For me, it's the SPY that matters. Because the SPY is more focused on the top companies and exactly what they're doing. It's very just hyper focused on that rather than the DAO where it's more just kind of an overall. Um, yes, the DAO has heavier tech weights and everything else, but it's not something I actively look at. It's not something I actively trade. I don't really care too much about the DAO. If the S&P is doing good, the DAO's going to be doing good. If the S&P is doing bad, the DAO's going to be doing bad. So even on a small account, basically if you only had 50 bucks in the account, you take a trade for 50 bucks, you flip it into $60. Instead of being locked out of the funds for that day, you can then go use that $60. So it makes it so you can trade a lot more. Um, you can be taking a lot of these entries and exits where a cash account can't do that. Say you have, $200 cash, you entered $150 of puts at this level. Well, that only gives you 50 bucks left to trade with for the day. That means that you may not be able to take calls here, you may not be able to take puts here. Basically, the rest of the day is kind of shot for you. So, um, EDT is super, super, super good for day trading. It's going to help pretty much every single person. So on Webull, I have the time and sales on the right side of my screen. It's not showing on the stream, um, but it's the right of where my cursor is. Um, and I have my orders set to track anything above 999 shares. So anything that's a, quote unquote large order is going to be tracked. Currently, that's only for margin. Sorry if it sounds like I have bread in my mouth. I'm starving. Um, Currently that's only for margin accounts, but come, I believe June 5th, June 1st, something like that. Webull's going to be allowing it basically on cash accounts too, where you don't have to have margin to be able to, um, re-enter those trades. Instead of just putting a settlement on your funds, they're going to allow you to continue to reuse those as long as you have the actual cash available. Give me 1 second and we'll go over the VVIX and HIG and everything. Okay, let me take a look at the HIG. Yeah, basically like their future account, their futures, you know. The HIG still kind of chopping in this range. I'm seeing large buy and sell orders, so that's not really giving me conviction on either side. Um, liquid slightly buying up on the day, which is, that's leaning towards the bullish side of things. QQQ again has not finished out this top of this cup. As long as that cup top has not been completed, then, this can very, very actively turn into a bearish structure, which that's what we're looking for. We do see the double top there on the 1 minute time frame, and we're looking for this to form the right shoulder now currently for this, you know, larger head and shoulders on the 1 minute time frame. Semiconductors starting to form a head and shoulders there as well, which is good because again, we have not filled the cup. If we're starting to see bearish structure here, then that's telling us that we are going to be heading downward. Okay, so that's looking good. We will obviously keep track of that. Marking my entry. And those four puts that I didn't sell at that range, I'm still holding on to. So even if we pull back up, I'm still going to be holding on to those because regardless, that trade is already in the profit. I've already made the money on that trade. So regardless of which way it goes, I'm good to go. BVIX, we still need to be seeing some buying in this. Again, this is beyond concerning to see the VVIX dropping all day while seeing bearish structures and anticipating bearishness. So it is very concerning. It is not something that we see very often at all. In fact, I've only seen it one other time, which again was on Tuesday, or Monday, whatever day we saw the VVIX drop from 98 to 91. Um, I've never seen it do that before, but we also had a massive, massive sector rotation that day, so that's why I credit that to that. Now, currently, we are seeing a little bit of a sector rotation. We're seeing the dollar gaining on the day. We're seeing utilities gaining on the day. We're seeing the health sector gaining on the day. Technology was gaining on the day, but it's finally starting to drop a little bit. Um, but a lot of weight's going into utilities right now. SPY here on the 1 minute time frame, pushing from the lower Bollinger to the 20 mod, looking for that 20 mod test to reject and continue pulling us downward on the day. Yes, I'm still holding those TQQQ puts, still holding the SOXS calls, still holding all the bear positions. Because if we break this 5 mod today, we will be heading to the 20 mod. Okay, and I'm Heavily anticipating this 5 mile to break today to the downside. Again, kind of the only signal that is throwing me off is that the VVIX has been pulling down. Um, we've seen this happen again one other time in the past, which happened to be this week. Um, but this can be attributed to sector rotation rather than the lack of selling, I guess, or the increase in selling. It's rather selling in one sector, moving to another, instead of people just taking puts against their positions or taking insurance against their positions. So it is a little bit of a pretty large divergence within the day. We've been seeing our HIG pulling down quite a bit. We've been seeing liquid pulling down quite a bit. We've been seeing, our equities and everything pulling down quite a bit. So, it's interesting. The high of the day is literally right at where we marked the upper bounds of the 5 mile. Literally right at that 740.62. Um, I don't know, it just makes me laugh. It'd be a really nice confirmation if we could get a upward movement within the VVIX to really solidify that we're going to be seeing some of this downside. We have this very potential head and shoulders on semiconductors. If the head and shoulders completes, then they're going to grab that liquidity at the 515. So we are looking for that, and that will coincide with the pull down in SPY, QQQ, all that good stuff. Yeah, and that's exactly the whole thought process, is that we want to reduce the red days. Um, because even if you could get basically a zero on every single trading day and you only have a single day where you're green, you're beating 99% of traders. Um, which is not easy to do. Um, so if we can reduce the red days, or at least severely, you know, reduce how red they are, then your portfolio is really going to see some upside. Um, because that changes the perspective of, oh gosh, I'm losing money all the time, to, okay, I'm having a little bit of a downturn, but overall I'm consistent and overall I'm pulling more green days than red days. Um, and on those red days, I know how to keep my losses minimal. So that's the thought process moving forward, is that we want to keep the losses very minimal. We want to keep the wins. We're not going for home runs every single win, but if the home run is available, we will try to grab it. But the whole goal of trading is consistent growth, because while you might have a small portfolio now, only taking one or two contracts, eventually you will be growing into that portfolio taking, 20, 40, 60 contracts at a time, where that's not going to be outside of your realm of risk. So it's all about the time, and a lot of people unfortunately don't want to wait. They want to get rich very, very quickly. But those are the traders that usually do not last. And even if they do have a very big win, um, usually that very big win will not stay with them very long. Usually they will end up spending it back into the market and losing it all again, because they don't know how to trade. They don't know how to be consistent. Once you know consistency, then you can really work on, you know, batting for home run every single time. But first go up to the bat, and or go up to the mound, and make sure you can hit almost every single ball that's thrown at you. Um, it may not be the best hit in the world. It may just be where you punt the ball and it just gets you to first base. but learn how to be consistent and your trading will be very, 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 very clean. And it'll make you feel like you're actually trading rather than trying to gamble for wins. So that's my spiel. Yeah, exactly. It's like when I have red days, my red days are very, very minimal. On that day where we had the market absolutely run against us, I was only down $8. $8. Um, that's nothing for me. I mean, that's a nothing loss. I'll take $8 loss when the market pumped like 2% against my positions any day of the week. Um, so I take a lot of I don't want to use the word pride, but I put a lot of effort into ensuring that our losses are very, very small. Because that's how you gain consistency. That's how you win a lot. And that's how you have an account to be able to continue trading to win. So yeah, exactly. I mean, even if you're only making like 25, $30 a day, what does that equal after 10, 20 days? I mean, that's building your account. That's building your portfolio. Eventually those wins are going to start turning into 50, 60, 100, $200, and you just keep growing the consistency. Looking for this head and shoulders to pull downward. So I'm trying to watch it very closely. SPY we did have on the 1 minute time frame, we did have this inverse cup close, which means that from that inverse cup closing, we do expect a small handle or continuing to head downward. Now we are starting to head downward into this yellow liquidity range, which that's exactly what we're looking for. And not only are we heading downward, excuse me, I'm losing my voice, we're building the liquidity to continue pushing downward. Okay. Um, so it's very likely we're going to push that level to the downside very, very soon here. We don't have an invalidation on semiconductors on this head and shoulders or anything just yet. So everything's looking just fine. We could talk about hedging now, because I'm kind of just waiting on the market to push down. Um, so let's talk about hedging. Now, let's talk about when the market is pushed up super, super high, and I want to use a different symbol just because I don't want to delete my spy drawing. So where is UPRO? Where are you at? Okay, so this is basically an ETF for the actual SPACs. So it's going to be trading very similar to the SPY, obviously. Now, here's what you consider as a hedge, right? So say we're pushing up into the upper Bollinger. Well, how do you hedge above this? What are you even looking for above this at this point? There's no moving averages up there. There's nothing to grab onto. So one thing we can do is identify the channel. And this goes back to an old concept, but a new concept for those who do follow what I do. Okay. We go back to channel trading. Okay. Now, how do we define a channel? You look for two support ranges within that channel, whether it's on the selling side or buying side, which I'll define that in a couple seconds here. But we do have buying support built here in two ranges, one at the 88 and then another at the 136. Okay, so we do have some form of buying structure built here. Now, where do we put the top of the structure? We put the top of the structure from the structure that broke us or that built this structure for us to break out. Okay, so what's that looking like? It looks like about in there for one of these cups, but I want to go to the hourly time frame for a moment. Check the 4 hour. Now I'm looking for a very specific bearish structure. Right here is not that bearish structure because we see a cup, but we see the cup being broken. So that means it's very likely going to be right there with that head and shoulders. See the left shoulder, the head, the right shoulder. So that's how we target the top of our buying channel. Okay, we're looking for what created this liquidity to be able to head downward and upward. Okay, we see a very well defined cup there. Okay, from the top of that cup, we see the handle continuing with a nested cup there into basically nested handle, up, 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 and up we go. Okay, so how do we target the upside from here? Well, we follow the channel. And whether you want to just follow the top of the buying range, that's up to you. Whether you want to try to go in between the buying and selling range, that's up to you. But you're trying to target some of this upside. So say we have a bounce on this channel. Where's this bounce going to head to? Well, very likely we're going to close this cup. Well, assuming we were back there anyway. So before we even got that support, hold on. So before we even got that support, we had support there. So let's assume we don't have this price action yet. Okay. So assuming that and equaling out our channel here above the buying, where can we target some of the support? Well, if we're to have a bounce, it's going to be above that cup. It's going to be about in that range. So what contract can we target from here from the upside? Well, that looks like a 153 call. Okay. When we were at 145, almost 146, how much would have a 153 call to the upside cost? Probably not a ton. I don't remember the exact prices within UPro, but probably not a ton. And what would have we been targeting for the downside? Well, we would have been targeting that 20 mo. So from the downside, we would have been taking a basically 141 put. Um, with that, you have almost a very even level between your put and your call. Now, the call here, and we're just going to show this as red as the put, green as the call. Going to delete that. Now, is the put in favor? Absolutely, because that's where we expect the market to go from the upper Bollinger. But we have the expectation too that we can pull to the upside, okay? And that upside hedge is going to be out of the money. It's going to be cheap, but it's just to catch the weight from this put. And if we started pulling up, the delta on this call is going to be shifting very heavily. So a lot of the delta that you spent on this put will shift into that call. As we get to that position, you can start closing this put and profiting off that call. Okay. So that's kind of the overall idea of it. Now, we do look at deltas as well, and that's something I also want to look at, but let me just take a look at the SPY price really quick. Oh, SPY's looking absolutely fine. We should be heading down. Okay, but let's talk about deltas, and let's go back to UPRO just because we're using this as the example. So let's say we were hedging for June 5th. Okay. Now, of course, I can't see the delta on the 151 call because my Weeble on my laptop's stupid. However, um, we can use this 149 as an example. We see that the delta is 0.19, basically 0.20. Um, it shifted and I can't see the 149 anymore. But the delta on that was 0.20. Okay. So that 151 call probably would have had a delta of maybe 0.11, which means that every $11 of or every $1 of upside, that contract would gain about $11. Okay. Now the delta will shift as you start pulling closer to in the money, but that delta is telling you that at least heading up there, you're going to start gaining roughly that 11, to $12 per dollar upside. Now that delta will shift, and the example is that we talked about, I believe, the 141 put. Well, the 141 put has a delta of 0.54, meaning, well, it just says negative, but that's because that's a put. That's negative delta to the downside. Okay. But this means that you're going to be gaining $54 on every dollar downside. Okay. Now, how does that equal out? Once the price action starts pulling to the upside, that delta from that 149 call, um, that 0.20 delta, where we're calling the 151 call about a 0.11 delta, will start pulling upward as the delta within the put starts pulling downward. Okay, so that $54 movement to the downside will eventually shift to being, the $11 movement to the downside because this will start going out of the money compared to that call running into the money where that delta might start shifting up towards the, 0.40, 0.50. Eventually it'll overtake the delta on that put. So that's the whole kind of methodology behind it is that in the worst case situation, you're going to be able to catch the loss that you would have had. Oops. So the way I close, hold on. There's a lot of questions. Hold on. I don't use stop losses. I know that sounds silly. I set market conditional orders, which kind of work the same way. But with a market conditional order, I basically set the level that I'm looking for, and market will do a market sell at that level. Um, but that's how I determine that. Okay. How do I close the losing option in anticipation of the momentum continuing? You can allow the option to go to zero, just about. And ideally that's not what you're looking for, but when you're taking a straddle or a strangle, which a straddle is basically two options that are either in the money, yeah, have a good nap. See you later. And thanks for stopping by. But if you have a straddle, you're basically taking two contracts that are in the money or at the money. Um, so in terms of thinking of a weight, that means basically you have 50%, 50%. So one side's going to start shifting to 60%, the other side's going to start shifting to 40%. When that starts shifting to, 70%, the other side's going to start shifting to 30%. Now, eventually, that weight will get to the scale of where you start losing less on that downside because there's just not a whole ton more to lose other than the time, which that time has a value to it that's not going to be degraded so much by the price action. And the other side is going to be gaining value not only from the delta shifting, but we're also going to be seeing the IV shifting. We're going to be seeing the gamma shifting. We're going to be seeing a lot more interest, a lot more people, basically standing in line waiting to buy Halo at 12 a.m. in the morning, so to speak. So a lot of those Greeks are going to shift that straddle into being profitable. Now, the whole point of a straddle isn't to have some massive position on one side. It's that one of the positions are going to gain slightly above the other. And you usually exit, excuse me, usually exit the whole straddle at one time. Now, a strangle works a little differently. A strangle is two out of the money options. So you're basically usually taking strangles towards the 20 mile range where your upside is very well checked, your downside's very well checked. Um, you're going to be able to really make a very, very solid determination of your upside versus downside. Um, and for example, we use the daily time frame. So let's just hide the drawings for a second. Let's go to the SPY. Say we're at the 20 mile here. The 20 mile basically at the 630. That means we would take a contract for the 750 and we'd take a contract for the 700. Um, and that's basically $20 of upside, $30 of downside. Um, well, $25 of downside. And that's basically trying to catch either the upside or the downside. Um, the goal is to have one of those basically cheap out of the money options run in the money, which would heavily be a major profit. So hopefully that makes sense. There's a lot to go into with hedging. I wanted to talk about it a lot more, um, but with my laptop messing up earlier, really kind of threw my day off. Yeah, strangles are out of the money on both sides. Whole goal is to pull one of them basically to at the money or in the money. Yeah, you're very welcome. And again, we can go over this all the time. I mean, I literally don't care if we talk about this each and every session, fine with me. We're still seeing our breakdown on SPY, which is very good. This Head and Shoulders right here looks super, super primed to take us down to the low of the day. Now, I want to see the VVIX because, again, I really do want to see some movement out of it. And not that movement. This isn't the movement I want to see. I want to see upside. Okay, everybody, I'm going to go AFK for just a couple minutes. Um, if you do have any questions, now would be a really great time because after I come back and after I answer all those questions, I'm very likely going to be ending the stream. Um, Today was a little bit of a longer stream, but hopefully you all enjoyed. I know today's been insanely choppy, but I want you to think about most chop days. Most chop days, people are getting absolutely butchered with their positions. For us, we've been able to find multiple very successful trades. Um, and that's something this trading style is very, very keen on, is being able to find opportunities even in times where it doesn't look like there's a lot of good opportunities. So yeah, okay. I'm gonna be right back like 5 minutes, everybody. If you do have any questions, now's a great time to ask. If not, again, I will be ending the stream fairly soon after I get back. So I appreciate everybody who's taken the time to watch, and hopefully you have been able to find some profits today or, learn a good lesson. And I will be streaming tomorrow at the same time. So I'm going to write a little note on the screen, take my AFK, and then I will be back. So, it's 10 for me, so it's 1 for Eastern Standard Time. So let's say I'll be back at 1:10 a.m. Standard Time. Okay, so I will be right back, everybody. But again, thank you for watching. I always appreciate everybody taking the time out of their day to learn trading with me. Um, but yeah, I will be right back. All right, I'm back, everybody. Let's see what's going on. Little bit of a breakout here. By a little bit, I mean a lot of bit. See where this goes. Okay, we do have a cup closed here. From that cup closing, we anticipate bearish structure. So this is a very, very, very quality short position to the downside. I would be targeting the 739 puts. Okay, that's going to hit you at the 20 MA. This micro cup has closed with that larger cup. So I like those puts a lot, taking those to the 20 MA. And if this is a liquidity grab, then we will be heading down below the lower or below the 5 MA today on the daily time frame. Kind of what I'm looking for is for this to break down and head towards the 5 MA on the daily time frame. Perhaps this is that liquidity to do so. However, VVIX still just pulling downward, so it's really hard to look at that and assume we're going to be heading downward. Same with HIG too, so I'm assuming some sort of news or something came out. I just don't have the ability to check it right now because I'm charging my phone. VVIX pulling up from hitting that 92.42. So if this is a liquidity grab, we will be seeing this pull down very quickly, which my 739 puts are already up quite a bit. Again, using the 20 mall as an exit, so the 739.18. I need to grab my phone again. Literally charged it right as I grabbed those. So I want to set a conditional order for the 739.21, okay, for at least 16 of those puts again. The additional four I will, attempt to ride those downward. Okay, if this is the liquidity grab that potentially I think this could be. But we did see Success push up pretty aggressively here. So if this is a liquidity grab, we do need to pull downward very, very large. And we need to see our VVIX actively skyrocketing, um, which you know, we're seeing a little bit of upward from that downtick in VVIX, but again, it needs to be a lot more. Okay, so let me go over the questions. Yeah, I mean, you just continue averaging. Again, each time you push into the upper Bollinger, that is a put entry. These puts did very well. And now we're waiting for the next puts. Technically they're already up, but we want to wait for our 20 mile exit. 20 mile is going to be pulling up while we're at this range, so just keep that in mind when you're setting your conditional orders or stop loss or whatever you want to do to set that order. Now, NVIDIA still isn't breaking out. Actually in a very solid put opportunity, which is very tempting for me. Semiconductors, I really want to take more puts against, but I'm not going to right now. Already have a boatload. Now, I want to check the news, and let's just look at our unusual whale bot, because something definitely happened. Okay, so reports in Iran, reissuance of operational permit for Shahid Soleimani International Airport from next week. The first flight will take off in coming days, coinciding with the whatever. That couldn't have been the news. Hold on. Yeah, I'm not seeing any news yet, so this might just be just liquidity breaking out to the upside. We did have our VVIX pulling down the entire session. We're seeing a major pull down in oil right now. I'm trying to figure out why. Well, something pulled oil down very aggressively, and that's why we got this candle to the upside. Um, I'm not seeing what yet, but some sort of news definitely did hit this. Okay. Um, it's definitely going to be some sort of news out of Iran. If they're planning to open the airspace, excuse me, then maybe people are perceiving that as, you know, there's going to be some form of ceasefire or end to this conflict. Because why would you open the airspace if that was the case? Okay, the final draft of the agreement has been reached. Yeah, that would definitely pull the price up. Okay, so I'm still entering additional short positions here. Um, just gonna, continue sticking to the rules. So I'm again targeting the 739. Yep, there it goes. Yep, that news is true. It is the final stages of the draft or whatever. So am I going to be entering my short position or exiting my dated short positions yet? No, not yet. Okay. We still have some major data tomorrow, and again, I don't know if this is going to be a liquidity grab or not. Um, I do have calls going against this, so I'm completely fine right now. And hopefully everyone's been slowly adding some calls. I know I've been discussing it throughout the last few sessions. But again, volatility works both ways. We have positive volatility and negative volatility. Um, Positive volatility can create these very, very large mass upward spikes, extremely fast. And that's currently what we're seeing. So But for me, I'm continuing to add puts into this. Um, these are 0 DTs, simply just targeting the 20 ma. We do have this larger cup filled, which invalidates this head and shoulders. And this is starting to not look so good. We're starting to build a lot of liquidity in this range. Okay. Now, we're still within the bounds of this larger head and shoulders, but this is starting to look pretty sketchy, okay? Um, Something we will go over tomorrow more because we're gonna have more time to deal with this. Okay, this isn't just going to be a today type thing. VVIX still pulling low, basically at the low of the day, 92.05, almost entering that range of being within pretty much safety. Um, but again, I see a lot of reasons for a pull down still. Now this cup at the 525.12 is almost certainly going to be hit here very soon, which this will give us an exit on some of the puts over the next few days. Okay. Yeah, we're fine with that. SPY, I'm continuing to hold my puts. So we almost had 5 really good trades today. Um, but I did miss that entry on the call. Even though I called it out, I missed it just because it was so quick. Current puts, again, we're looking for this 739 range. The VVIX is far better to watch. Um, the reason why is because the VIX can be manipulated by retail, whereas the VVIX really can't be. Um, the VIX watches the calls and puts being written on the SPACs, whereas the VVIX is actually monitoring the volatility within the contracts that are being written. Um, so when you have actual real selling movement, your VVIX is going to be flaring up. Whereas you can have the VIX going very green on a buying day. Today our VVIX was telling us almost exactly what was happening. We just were watching the structures, and of course I'm still bear biased because we haven't tested our 20 ma in 30 something sessions. So, but the thing that did throw me off today is that we did have the HIG pulling downward against the VVIX. Now, that isn't the case so much now. Obviously, we're seeing a lot of buying within the HIG, so now it's all kind of correlating to make sense. Um, but at the time, it didn't. At the time, it really didn't make a lot of sense. This cup has not closed, which could turn into a double top. We have a little bit of a head and shoulders on the 5-minute time frame, or on the 1-minute time frame. Excuse me. So I'm still good with our puts here. Push well above the upper Bollinger as well. So very quality put entry for our downside here. We should be able to really capitalize on that full $3 downside, which is going to be really, really awesome. Now everybody's drip shares and drip calls should be doing a lot better. Um, Now that we're finally having things working in favor for us. Same with our USO puts. Mine are back in green very slightly. Let's look at Qcom. Qualcomm is technically one of the best companies in the world. It's been around for pretty much ever, and it's always been within the top. Um, so it's a company that is overlooked quite a bit on the daily time frame. While we are seeing a bounce, dang, the low of today was at 197. That would have been great. We are seeing a bounce, but it looks like we're retesting the 10 mile currently, which is at 209.31. Market price is at 209.62. We did just leave this upper Bollinger, um, about a week and a half ago. So we are looking a lot more towards that 20-mile range. Last time it tested the 20-mile, it was basically around that same time, SPY and QQQ. It was just a week later. So instead of the 8th, it was on the 14th. So we're still very much due for a 20-mile test within QQQ. Um, it's hard to be bullish right now, even though we're having good news, because we've kind of heard this story multiple times before. Um, and on top of that, again, the market really, really, really needs to do a support retest. Um, but yeah, tomorrow maybe I'll come back with more of a neutral bias. Now, does anyone have any other final questions before I end the stream today? I know we pushed up, but I'm currently writing the 739 puts, writing those to the 20 mile. Those are 0 DTEs. Completely fine holding those right now. We still have, you know, 2.5 hours within the trading session, so those should hit very well. I'm not too worried about that. And this news, while I'm not gonna say it's gonna blow over, um, it should taper out slightly. We've already kind of gotten the big reaction already, so I am looking for that pullback. But if there's no final questions, thank you all for watching so much. And no, this isn't bad news for the TQQQ puts. Just continue holding those puts. We still have time on them. We will reevaluate everything in the morning. Um, I don't want to sell puts at the high of the day. Um, it's not ideal at all. Even if this is going to be a successful 5 mile test to the upside, that means that we also need to very likely come down and retest the 10 mile again after this 5 mile. So we have room within the next few days to find a proper exit. Okay, if we're going to be continuing to just rally and rally. Now, if we do continue pushing up on the upper Bollinger here on the 5 minute time frame, I will add some more of these 739s. Again, sticking to my rules, I add pretty much every single time we push into the upper Bollinger. So if we continue pushing into the upper Bollinger, I will add more contracts. Yes, still holding all the SOX contracts, still holding the SOX puts, still holding everything. Everybody's SOX put should be doing absolutely super good. Um, I have 11 puts, 10 puts, 9 puts, no 8 puts yet, but um, everybody should still be holding those positions. Only above the 5 minute upper Bollinger. Okay. Um, that's the only time I'm going to continue adding positions, but as we are there, I will continue adding and look for that 20 mile exit today. So I'm gonna add another set right now. And again, it's only 4. So this will bring me to a total of 20. And if we keep pushing up from here, I'll add another 4. So that'll be bring me up to 24 and so on and so forth. I've had that happen before. That's unfortunate. Okay, everybody, I'm going to go ahead and end the stream here. Thank you all for watching. I will be live tomorrow again at 9:15 a.m. And hopefully you were able to make some money today. Hopefully you were, able to learn some stuff. And I hope to see you all tomorrow. Thank you all for the great stream, everybody. You can still buy puts here, yes. Yes, I would still say it's reasonable. And again, just target that 20 mile on the 5 minute time frame. Yeah, you're very welcome, everybody. I hope to see you all tomorrow. Thank you again for the great stream. I appreciate all your time being here. Um, yeah, tomorrow should be a good day. Take care, everybody.